Let's get in a special voice here. We have Nilesh Shah, the MD and CEO of Envision Capital, to take stock of the markets right now. Nilesh, good morning. Thanks for taking the time out. The real question is, what do you do at these levels, and would you be brave enough to start nibbling into some of these stocks that you've had your eye on?
Yes, absolutely. I think this is an environment where you need to be calm and patient as well. And I think this is a time where you need to basically pull out your list of high-quality names, which you would have wanted to own. And I think one has to take advantage of these price declines to basically add to those names, accumulate them for the long term. We've had these kind of situations in the past over the last 10, 20 years where the markets have basically reacted to some kind of event. This is one such event. And I think this will also pass. So our sense is that, and I think we need to keep in mind that 2019, the calendar year 2019 was so challenging for domestic reasons. And even in that environment, our markets had found a lot of support below the 11,000, and we're approaching close to that. So my sense is that I think probably at these levels, or maybe a bit more correction from here, you get into a super support zone, which I think should hold good. So I think on the whole, it's now time to be constructive and kind of have a positive bent of mind.
Hi Nilesh, good morning. But it's becoming really difficult to predict, anything the way the global equities have reacted. We've seen how the FI desk has been selling incessantly into our markets. For last 4 sessions, I think they've sold about 10,000 crore. So much pessimism around. The only one macro tailwind that we can see for India is crude prices coming off, Nilesh. Do you think it's the right time to look at the oil sensitives then?
I think yes. I think fundamentally, this is essentially, I think, bodes good for India fundamentally with the crash in commodities, crash in crude. I think that's positive. Two is again, we're not so much linked to global supply chain, and we're not so much part of global trade as yet. We're still a domestic-driven economy, and so clearly, I think our demand, which has been relatively weak and subdued, I think should kind of hold at where we have seen in 2019. I think on the whole, fundamentally, this is positive. Now, in terms of market reactions and buying opportunities, yes, in the very near term, the sentiment looks weak. But it will probably just need one piece of bad news for the sentiment to turn and the markets to have an uptick. And that's extremely hard to kind of, in a way, predict. I think what is important at this point of time is to basically look where value is emerging or where prices are becoming more reasonable in context of the long-term opportunity. And I think that's basically the approach which probably investors have to have in this environment.
Nilesh, a final question, at least from my end, and that's to do with the supply disruption, which a lot of companies may face owing to, imports being cut off to a certain extent because of, the problems and challenges across the globe. Based on that, at least some analysts that we've spoken to this morning are suggesting that there could be a little bit of an earnings cut in the near term. Are you also of that opinion? And if so, what are those sectors that you may not want to venture in at this point in time?
Well, I think what it looks like from a supply chain disruption, what it looks like, I think, is that some of the supply chains in the automobile space are likely to get impacted. And I think one or two companies have already basically said that it could impact our volumes and production over the next 2 or 3 months. So I think, yes, that seems to be a reality. As it is anyway, automobiles as a sector was very challenged. And I think it comes under additional pressure in this. But we have to keep in mind one thing, that if the coronavirus-related issue settles down, keep in mind that China has the ability to spring back and bounce back and should basically be able to address the gaps in the supply chain a lot faster than what we probably can think or imagine. So we have to keep in mind that. So I think, yes, the near-term outlook does look bleak, but I don't think we should be completely negative in this kind of an environment. Number one. Number two, I think consumer appliances could potentially get impacted if this whole issue lasts longer than maybe February or March. So if things settle down by March, I think that probably sector will not get impacted. But if it extends beyond March, I think consumer appliances could also get impacted because I guess a lot of imports do happen from China and that part of the world. But nevertheless, I think the fall in commodity prices is again the blessing in disguise for them as well. So I probably think it's more a neutral to a mixed view for them. But I think out and out, I think it's going to be challenging for the auto space.
Right, and we've seen that knock-on impact coming in for a lot of these companies. You've had Hero Moto, TVS coming out and said their production will get impacted for the month of February. Before we thank you, Nilesh, I just want your view on a couple of these specialty chemical and pharma companies. We've been interacting with the managements in the recent past, asking them the impact of outbreak of coronavirus, and most of them have said the prices have started to move higher because of this, and API prices are high. We've already seen how these specialty chemical stocks have been moving. Do you see any investment opportunity in this pocket?
Yes, I think specialty chemicals and pharma seems to be the unintended beneficiary of this breakout which has happened in China in terms of the coronavirus. I think, of course, this as an opportunity has been gaining traction in 2019 because of the kind of tariffs which were getting imposed on China, and now, of course, 2020. So clearly, if you look at some of the other sectors like, say, textiles or consumer appliances or smartphones and all of that, there are other outsourcing destinations like Bangladesh or Vietnam or places like Malaysia and Thailand. But when it comes down to specialty chemicals and pharmaceuticals, I don't think there's anything else which matches India. And so to that extent, I think India has an inherent and an intrinsic advantage versus a lot of the other countries. And therefore, this is one sector which I think will clearly be the big beneficiary of all of this. Nevertheless, having said that, in a correction of this magnitude, even those stocks will correct. And I think on those corrections and at reasonable prices, one should be ready to basically identify and invest in such long-term opportunities as well.
Okay. All right, Nilesh, we'll leave it at that. Thank you so much for joining us and taking us through your views on the markets, which are extremely volatile at this point in time.